Okay, guys, and I was right again. I know. Claps for me. Thank you. I'm just joking. But yes, the Fed done what we expected him to do. Especially Jerome Powell came into the media, after the FOMC press conference. I wasn't awake at 6 a.m. No way. So I was just watching the conference right now, and I have a few notes here I want to share with you all. But before I do this, please subscribe to the channel, give us a thumbs up on this video. This is a very nice video, okay? Most of the people don't know what's going on right now with US economy, especially with the interest rates. I'm gonna open the black box here and tell you everything, okay? And share this video with your friends. Most important, all right? Share these videos with 2 friends, please. This is all we ask. Okay, now, no surprises here. We've stayed at 5.25%, 5.5%, sorry. We haven't changed anything on this scenario, okay? So they did pause interest rates again, as I expected, and as 99.7% of the market were expecting. Okay, but now I've mentioned to you guys that the most important thing would be the FOMC press conference and not the interest rates, because the interest rates was already, widely expected a pause. So we didn't have anything like, oh, maybe it's going to hike, maybe it's going to pause. No, was widely expected already, and it has been done. So that's it. Now, jumping in for the FOMC press conference, that was 30 minutes later after the FOMC interest rates decision. It was quite interesting how Jerome Powell, it was very different from all of the other ones that we had this year. It was very different. It was lots of more charts, lots of more like a presentation of the economy, and not only talking about the monetary policy. He talked about as well how he sees the future, 2024 and 2025 and 2026, and how is the GDP, how is the CPI, how is the inflation in general, working, and how they will reduce the interest rates and what they are doing to achieve this. So it was very interesting. I would recommend you guys to watch it. It's free. Just go YouTube, type FOMC live, and it will come in. First, he starts addressing that inflation is still too high and the path forward is uncertain. Okay, what he wants to say with that is, of course, he needs to say that inflation is above the target range, that it's between 1 to 2%. It is right now at 3.2%. Year over year, so the year inflation, and we just had this week as well, yesterday, 3.2%. So it's still 1.2% above what they had to be. So they need to control this 1.2 and bring it down to 2%. And he says that the path forward is uncertain. They are continuing to reduce the security holdings, sorry. And the GDP is on track to expand 2.5% year over year because of the stronger consumer demand, all right? Remember what I've mentioned to you guys, that we are close to festive dates. Again, I'm just mentioning this again because I have to mention multiple times so then you guys get it. Because people will go and spend money on Christmas gifts, on New Year's gift. It just depends on where you're from and what religion you follow. Anyways, so if Jerome Powell, just thinking here with me right now, if Jerome Powell said that the GDP is on track to expand 2.5% year over year, that means that retail sales will expand as well. Okay, therefore we're going to have a per capita as well higher. So we do have retail sales tomorrow, Friday. So just watch out for this one. Probably we're expecting a little bit more than what is coming to that. But this one is another video. It's another context. No, he made very clear, no need to raise interest rates anymore. No need to raise interest rates anymore doesn't mean that they won't raise if needed. And he mentions that, okay? He says no need to raise interest rates anymore, but it's not out of the table. So basically, it is an option, all right? If inflation goes much higher than predicted, or if the economy goes in another way that I'm not predicting, then yes, another raise on interest rates would be possible, okay? So just bear in mind, this is a hawkish comment, but neutral as well. Exactly what I've mentioned yesterday. He would keep a neutral to hawkish approach. And this is exactly what he's doing, okay? Now, the target for, remember I've mentioned yesterday that the market is following one path of interest rates and Fed is following another path of interest rates. Well, now we do have what is to expect. And if I would have, if I would give you one advice as a personal, as from me, don't ever fight against the Fed. Don't ever do that. All right? Why? Because 99% of the times the Fed was right and the expectations were wrong. So if they say something, they do it. If they don't say it, they don't do it. All right? Don't believe on any fugazi that is out there. All right? This is Wolf of Wall Street. Like it? Anyways. All right. So let's go for rates in 2024. Most probably they're going to finish in 4.6%, 3.6 in 2025, and 2.9 in 2026. But this is only if the economy don't involve, this is only if the economy involve as expected. Okay. So if the economy don't involve as expected, then all these three numbers that I've mentioned right now, forget about it. We need to redo it, okay? So look, I do think, again, that we are quite good for soft landing next year. But now, I just want to bring it here and express how did the Forex market, Forex market took at these. Well, the dollar was weak. Euro dollar went up, all right, more than 1.6%, close to 2%. Gold went up. US 2 years and 10 years went down. So most probably we're going to have a weaker dollar on this end of the year. That is exactly what I've been telling, most of the whole videos here since 2 months or 3 months ago, that we would have a little bit of strength in the end of the year for the US dollar, but diminishing towards 2024. Okay, and in certain times we see that the dollar is strong versus very weak currencies, but as euro dollar went down, 2%, 2.2%, was because of a dovish ECB combined with a lower inflation. Okay, and now we do have a Fed being neutral to hawkish, and projections are pretty good. So, but of course, on a very low base that we are finishing monetary policy hikes on the Fed. So that brings a weaker currency for US dollar. All right. So this is all from me today. We did had a few more things that I want to touch base, but for now, I think there would be the PPI came in as 0%. All right, guys. So this is all. Hopefully, I could clearly, put some light on your head and think about it. What is actually happening on US? And hopefully, I could help you. If you have any questions, please give us a comment. Just put it there. I will be happily answering your questions. And share this video with your friend again and subscribe to the channel. All right. I see you in the next week, or maybe tomorrow actually. Sorry. I see you tomorrow and enjoy your day. See you.